Hi everyone, welcome. In this video, I want to talk about real estate and the differences between owning a home versus renting a home. So owning versus renting. In my opinion, anyone who is interested in building wealth should definitely take an interest in learning more about real estate and investing in real estate, especially residential real estate, because we all need a place to live, and the population of the world is only getting larger and there's limited land. But anyways, in this video, I do want to talk about the differences between owning and renting, because there are benefits to renting as well. A lot of people may say that owning is always better than renting because you are putting money, some of that mortgage is going to go into your home, so it's being saved or invested into your home, and you don't get that with rent. But there are definitely some benefits of renting as well. So we're gonna go over the differences between the two a little bit and talk about owning versus renting. So let's talk about the pros of renting first, because that is where usually most of us will start. Most of us start out renting when we move out of our parents' house, and there are a lot of benefits of renting. The two main benefits of renting would be flexibility and cash flow. So flexibility, one, with the flexibility of being able to move a little bit quicker and easier if you want to change cities, maybe for a new job or a change of scenery, or even just moving locally within your city to a different neighborhood, a better neighborhood, or whatever. As a renter, it is a lot easier to move and it's an easier process. There's less moving costs and closing costs. As a homeowner, you own your home and there are going to be closing costs. Real estate agent fees and legal fees are all fees that you need to consider as a homeowner when you look to move and sell your home. So it is going to be a longer process if you are looking to move. I would say that if you're a homeowner, you should be looking to hold your home for at least 3-5+ years, considering you are investing in your home and you're not really trading your home, like flipping houses or anything like that. If you're buying a home for yourself as a place to live and then as an investment, then you should probably be looking to hold that investment for 3-5+ years, more like 10+ years. So you're a little bit more tied into that investment for a long term, and it's not as easy to move if you want to move cities for a new job or just move neighborhoods in your own city. It is going to be a little bit harder. You're going to have to sell your home. That's going to be a process. You have to consider the closing costs of real estate agent fees and legal fees too. That may eat into your profits, so definitely consider that. Another benefit of renting is the cash flow. Usually renting will be a little bit cheaper in terms of monthly cash flow. Let's say you have $1,000 or $1,500 a month in rent. If you're looking at a mortgage, you may be looking at a mortgage that is $1,000 or $1,500 per month mortgage, but on top of that, you're looking at utility fees, property tax, home maintenance fees, and everything like that. As a renter, those utilities might be included. You don't have to pay property tax. You don't have to pay as much insurance. You don't have to maintain the property. The landlord has to maintain the property. There is a lot of flexibility in cash flow as well for renters. It's usually easier on the pocketbook each month. Now, yes, talking about paying into a mortgage and building that equity, yes, you are saving some of that money. So let's say you're paying a $1,500 mortgage, you may be saving about $1,000 a month into your home. So assuming your house's value is going to be stable or appreciate and grow in value, which real estate, again, residential real estate, in the long term, 3, 5, 10+ years, it should go up. Depends on your market, of course, and where you live and the economic conditions. But in the long term and in general, residential real estate should go up. So assuming your house's value stays the same or it goes up, every month that you pay down that mortgage, that debt, you are building equity in your home, and that is money that is yours that now is in your home and invested in your home. So yes, as a homeowner, you are putting that money aside, but you may be, instead of just a $1,500 mortgage, you may be paying $2,000, $2,500 a month with everything included, utilities, more insurance, property tax, maintenance, and all of that. So it really depends on your financial situation, your personal preferences, your investment preferences, because as a renter, you may have, $2,500 a month to put into a property, but you may prefer to rent and keep that extra 1,000 to put into the stock market, for example. It's just a different kind of investment, right? So definitely keep that in mind for the cash flow kind of. It's definitely more flexible as a renter to have that extra cash flow, and maybe you have a little bit more flexibility in what you want to do with that cash flow. Maybe you want to invest it some months, other months maybe you want to just save it as cash, other months maybe you want to spend it, right? As a homeowner, you're kind of tied into that investment and you have to pay that $1,500 month mortgage with all the utilities and property taxes, and you're in for the long haul, and you are building that equity each month, and you are invested in real estate, but you are tied into that investment a little bit more. It's a little bit illiquid. It's harder to get out of compared to something like the stock market or keeping your money as cash. So that flexibility also goes towards cash flow and financials as a renter. You got to give that to the renters. They have a lot of flexibility in terms of cash flow, in terms of moving quickly and easier. So there's definitely benefits of being a renter. Again, there are benefits of being a homeowner as well. Not only are you building equity each month and you are invested in real estate, but yes, you may be tied into your property, but that tiedness also gives you a little bit more security. You know that you're not gonna get kicked out of your home. You own your home as long as you pay your mortgage. As a renter, that flexibility kind of goes both ways, right? Yes, you can move quickly and easily too, but also the landlord might have to renovate, or they might decide to sell their property, and all of a sudden you have to move without you being able to make even a decision on that. So that flexibility kind of goes both ways as a renter. It also gives you a little bit more risk of the landlord selling or having to renovate and having to have you move. As a homeowner, you own your home, so you don't have to worry about moving as long as you pay that mortgage. So that is another benefit of being a homeowner too. So if you're planning to, stay in a city for 10 plus years and you do have the money to afford a house, then yeah, definitely consider it. I'm not gonna say do it or don't do it. Talk to your bank, get a good mortgage rate, do the financials, do the calculations, compare what your income is and do a really strong budget. And see and make sure that you have a bit of a buffer even if you are gonna go into that big long-term investment, tied investment where it's a little bit more cash flow heavy, but you are ready to take that step. Make sure you have a little bit of a buffer. It'd be great if you can still save a little bit of cash on top of that to invest or save in cash or invest in more liquid investments like stock market, etc. But yeah, there are definitely some benefits of both being a homeowner and a renter. I can also talk about different ways to help your cash flow, whether you are a renter or a homeowner, in terms of renting out another room or renting your room out or turning it into some sort of income property. As a renter, you may want to move, you may be thinking about moving out and renting a 1-bedroom, but consider renting a 2-bedroom and see what you would be able to rent out that 2nd bedroom for, and then calculate what the cash flow is for you then. The same goes for buying a property. If you're looking to buy a 1-bedroom condo, maybe see if you can afford a 2-bedroom condo, and then do the math on what you could rent that 2nd bedroom for and have someone maybe paying your mortgage for you. But that's a topic that I'm going to go into another video, so I will save that for another video. But just to give you a little bit of taste that even as a renter or as a homeowner, there are ways to capitalize that, and to look for ways to improve your cash flow is always a good thing. So I will leave it at that, and I hope you like this video. I hope you like the topic on real estate. There's more videos on that coming, so definitely subscribe to the channel if you haven't subscribed already. Smash that like button if you like this video. I'm gonna wish you a good day, a good night, and I'm gonna wrap this one up. Until next time, all right, bye.